All right, good morning. It is 8:13 a.m. Central Time on Friday, August 25th, 2023. Let's jump right into the trade planning exercise. Now, heading into the open today, our intermediate term bias continues to be bearish, and our short term bias is going to be neutral, mainly because we have Fed Chair Powell speaking at 9:05 a.m. Central Time, and that throws a bit of a wild card into the mix. If we did not have that, given yesterday's weakness, our short-term bias would likely be neutral bearish. So given the level of selling that we saw yesterday, I'm much more inclined to sell pops into resistance rather than look to buy support, especially the earlier support zones. Now, that being said, anytime our short-term bias is neutral, we need to be much more aware of how the real-time intraday pattern and situation is shaping up. Now, as day traders, we always need to be mindful of how the day is shaping up. That is our time frame, and that's the one that we really need to be in tune with because our trades are going to work or not work within a matter of minutes usually. So as day traders, we really need to be in tune with how that real-time intraday situation is shaping up, but it becomes even more crucial when the short-term bias is neutral. So as long as the market is not showing us some unusual signs of intraday strength, the focus is going to be on selling pops into resistance. But given the fact that we've seen a lot of indecision in the market over the last couple of days, I think it also makes sense to play defense with the trades we take today. Now, the most aggressive area of resistance we have is 44.04 to 44.11. And if the market is truly in a weak state, then it may even hold below that. And on the downside, we want to see sellers taking out the 43.99 half level and the aggressive support at 43.89 to 95. If buyers manage to hold the market above 43.99 half, then that would be a red flag for sellers. It would be a bit of a warning sign, and it could open the door for a test of the overnight high and a push up into the 44.1675 to 26.75 initial resistance zone. So from a trade location perspective, the first area where location would be good enough to look for a short is 44.1675 to 26.75. And then above the initial resistance zone, we have even better resistance at 44.32 to 42. And that is also a potential short on first test. And I'm also going to set up a slightly more conservative short at initial resistance, but with my stop up at the next zone in the event that we are seeing more signs of intraday strength, or if there's more momentum than expected heading into the zone, but let's say ES is still exhausted into the zone, then we can put our stop at 32 and take the trade at a slightly more conservative price. Now, if we fail at initial resistance, there would still be potential for the market to return back down into the 4400 area and even the overnight low and the previous close. So if we get a failure at pre-market resistance or initial resistance, then we could still end up revisiting yesterday's lows. So as far as our targets go, the high probability in this case is probably best to keep it at roughly 99.5, but the final target is perfectly fine at 84.5, and it might even make sense to get a better target than that. Now, given that it's a Friday, we don't necessarily want to overstay in our trades, but if I am going to push for a more extended target, I'd rather do so on the short side rather than on long setups. So let's set this to 99.5 as well. 84.5 is perfectly fine here. So 20.75 and 24. So the nice thing here is that our entry is below 24 quarter. That's what we wanted. So this is a conservative way to execute that idea. In the event that we go up into 44.32 to 42, I would want to see the upside getting capped at 32 to 42. Because if the market takes that zone out, then yesterday's downside move would come into question. And at that point, the downside may be done and we may just consolidate, or we may even be in a situation where larger time frame buyers are now stepping back in. So if the market is really weak, then it could even hold below 44.04 to 11. In the event that there is some intraday strength, we could get a move up into initial resistance, and we do not want to see ES taking out 44.32 to 42. So that is still going to be an area where I am looking to short, and if the market fails at 44.32 to 42, we can still get a move back down into the broken pre-market resistance zone at 44.04 to 11 and the 4400 area. So I think what I'll do here is just set the target to 4400 as the final. So 35.5 entry gives us that. And in the event the market pushes higher, I would still be expecting sellers, given that it's a Friday and we're heading into the weekend. I don't think either side really wants to carry a large position into the weekend. So that is going to be it on the short side. And if in real time, after the Fed Chair Powell's speech, the market is still holding below the overnight high, then there may need to be some more aggressive short setups that need to be set in the moment. So again, anytime our short-term bias is neutral, that real-time intraday pattern becomes more important. So we might need to find a place to short. As I said earlier, I think it makes sense to exercise caution on the long side. So that's what I'm going to do. Definitely not looking to buy 89 to 95 or even 78.5 to 84.5. This is still pre-market support. So from a trade location perspective, 78.5 to 84.5 is still not really conservative location. I'm going to set up a long here, but I would need to see something in real time to consider taking it. So even though we are going to set up longs at pre-market support, initial support 67 quarters, 74 quarter, and 46 to 55, I think we have to be careful on the long side today. So unless we are seeing something in the moment, like a bullish disconnect on the advanced decline or a false breakdown in the NASDAQ, we would need to see some sign of intraday strength or at least a lack of weakness in order to justify going long after the strong sell-off that we saw yesterday. So pre-market and initial support, I believe, call for caution. And I think if the market is going to stabilize here, then ideally we want to see yesterday's low holding, but at the very minimum, we would want to see the 43.67 quarter to 74 quarter area holding. So that is the intraday bias confirming zone. A break and hold below 43.67 quarter to 74 quarter would serve as an intraday bearish confirmation. So if I am going to take a long today, and again, it would still require a real-time read, I'm more inclined to do so at initial support at 43.67 quarter to 74 quarter. Now, the caveat there is that if we break down below the overnight low, then the upside potential could be quite limited. So again, we are going to exercise caution on the long side at support. And in the event that the market gets overextended or exhausted into 43.46 to 55, I would anticipate a response or reaction there on first test. That is the more important inflection point on the daily chart. It marks the recent swing low from August 18th. So that is a better spot for responsive buyers to be active. So if ES is exhausted into that zone and we are not seeing excess weakness or big and sustained downside momentum or unusual downside momentum, then there could be an intraday reaction at 43.46 to 55, and I would anticipate that intraday reaction to have potential to take the market back up into the broken initial support at 67 quarter to 74 quarter. So I'm just going to set this final target to 67 quarter, and we can see that 50.75 gives us 2.5 R. If the market is going to stabilize, ideally we don't have to go all the way down into 43.46 to attract responsive buyers. But that is something that will need to be determined in real time. And if we take out 43.46 on signs of initiative selling, so on excess weakness and big and sustained downside momentum, then we would have a bearish pattern on the daily chart, and that is when we could actually expand the range into the 43, 33 half to 38 half area, with potential to head even into 43, 25 half to 28 half. And by that point in time, the market would be hitting a range extreme. And depending on how the market approaches those lower zones, it may be worthwhile to attempt a long near the area where the market would be exhausting the range potential. And the lower the market pushes, the higher the odds of buyers stepping in. So on the downside, in the event that we get excess weakness and we end up putting in a much bigger range than expected, if the market gets down into 43.0675 to 15 quarter, that would be a good spot, even 19 to 22. So these are potential trade setups, but below 46, I would not look for any big targets. I would essentially only look for a move back up towards 46, and these targets will likely need to be adjusted and made more conservative, because I think 46 is good as a final target. The high probability might have to be even more conservative here, perhaps around 38 or so. And the lower the market pushes, the more conservative the targets get. The final, I think we can keep it at 45. So we can see that, on the downside, 25 half to range extreme could still work out. Might just combine these two into a single idea. So instead of trading, 25 half and 22 half, doesn't really make sense to take two longs that close together. I think in this situation, it'll be better just to put the stop at 18 and take the entry at 24 half. So this is something we'll play with in real time. So that is how today is shaping up. Again, anytime your short-term bias is neutral, you need to be taking the real-time pattern into account. And if the market is really weak, we may not even go back up towards 44.20, and we might just hold below 44.04 to 11. And in that situation, we'll need to find a level of resistance that perhaps gets built in real time, and then we lean on that. And I think in the first 35 minutes of the session, we may just continue to chop around as we head into that Fed chair speech. And then following the speech, we could get some directional movement. And I think that's when we will get a better idea of how the day's bias is shaping up. But by default, the focus is going to be more so on the short side today, and I am going to exercise caution on the long side. All right, guys, that's going to be a wrap on today's trade planning exercise. Good luck and good trading today. And as always, if you found value in this content, please like it and share it with other traders, and I will catch you on the next one.